This podcast is brought to you by Sandlot Partners.
I am not going to lose. I don't care what it takes. I'm going to grind this out forever.
Yeah.
And I'm going down with the ship if we go down.
Yeah.
But I am not going to lose.
Welcome back to Case Studies with my friend Kent Alder, a Cache Valley boy, a Logan High Grizzly. And we had a chance to catch up the other day, and it was so fun. Like when I started doing this podcast, for me, I have this curiosity about success, and I've got this curiosity about just life and decisions and outcomes. And it's not, you got professional success and you've got spiritual success and family success and a lot of these different, ranges of outcomes. But there's a lot of stories that just the nature of my job where I'll get to know people and I get to know their story, but their story it's not a public story. That there hasn't been a book written. It's not a social story. There's not the individual isn't telling the story. And you're one of those people that you just have this beautiful, crazy, inspiring story that I don't think anybody knows. I think very few people know it. And so I'm so excited to sit down with you and kind of to jump in. So thanks for coming down.
Well, hey, thanks for having me, Casey. I really appreciate those kind words. And I'm pretty proud of what I've been able to accomplish in life. But it hasn't been me. As you know, it takes a team of people. And I've worked with some great people throughout the years.
So I want to start at the end. And then I want to go back to kind of the beginning and how you got there. So you build a company that today is publicly traded.
Mm-hmm.
What's the market cap of the company today?
It's TTM Technologies. The market cap today is about $7 billion.
So it's a $7 billion company, total market cap company.
Uh-huh.
The origins were buying your first company and then doing just kind of this roll up that turned into something that it's just this kind of powerhouse today.
Yeah.
Could you have ever anticipated that what TTM is today, that when you got started, that it could be something like that?
Well, I was not able to see that far in the future, but I knew that if we did the right things, we could build a great company. Now, did I foresee it being $7 billion?
Yeah.
No, not $7 billion. And a lot of that happened after I retired, and so my successor CEOs have done a great job.
Yeah, done a great job. So talk to me about TTM and what TTM does.
TTM, we manufacture printed circuit boards, and that's the little green board that all the chips and the resistors and capacitors go on, and that's just the raw circuit board is what TTM manufactures.
Yep.
And we don't have any technology that we own ourselves. I mean, we do that as service to our customers. They have all the technology and patents. So our business is more of just pure execution. We have to execute to make our customers successful and make them as profitable as we can and form those partnerships.
That feels like an insanely tough business.
It's a really tough business. And basically, I think it matches up with me and my personality too. I've always been fairly competitive in life, and when you get into the printed circuit board, it's a competitive business. You've just got to outperform your competitors and really drive service to customers, keep your employees happy, do all the fundamental things that make a business strong.
But low margin business?
Well, if I go back in time. And my career started with Lundahl Astral Circuits first, and that's where I got a job as their finance manager out of college. And I went there basically because I needed a job.
Maybe let's we're jumping around a little bit, but maybe let's go back to the beginning. So grew up in Logan.
Okay.
Was Logan home growing up? Like, were you born in Logan?
Yeah, you mentioned earlier Logan High, born in Salt Lake, but raised in Logan. My wife, Donna, was raised in Logan, both Logan High Grizzlies.
And you guys met in high school?
We dated in high school.
Okay.
I went on a mission. She waited for me. I was a little restless after my mission, so we didn't get married shortly after that. It was about a couple of years afterwards. So we had a fairly long courtship. But it's been great. We have 6 kids now, 17 grandkids, 1 great grandkid. My wife was just did an excellent job raising our kids while I worked on the career.
And so you marry your high school sweetheart, go to Utah State, but we were talking, and a lot of the motivation, and studied what? Studied accounting?
Well, I've got 2 degrees. The first degree was in finance. Then I went back and got a degree in accounting.
Okay. And a upper level degree, or kind of
it was
just a couple of bachelors?
They're 2 bachelor degrees.
Okay.
Yeah. I could have got a master's, but at the time.
Just felt like you needed kind of the extra skills or capabilities?
When I graduated from college, I went to work at the Wurlitzer's piano facility. I was an industrial engineer, worked on the floor, making processes more efficient. I left there, went to Valley Engineering, which was an engineering firm. And they wanted all their engineers, or everybody there, to have a professional degree, a professional engineering degree. Well, I was in finance, so I went back to school to get a degree in accounting to become eventually a CPA.
Okay.
So that's how I went back. And then that business slowed down because they were doing all the sewer water systems for the cities. That slowed down. So I went to work for IHD, which is a pre-built home manufacturer in Smithfield, Utah.
All Cache Valley.
All Cache Valley. And the idea there was I would be involved with the sales organization, Continental Growth, which was Deloy Hansen and Gary Sorensen.
Yep.
And so I learned a lot from those two about how to negotiate a big picture idea. And because
Gary and Deloy, like, those guys are like the original gangsters. Like, these guys are no, they really are. Like, they were entrepreneurs early, and they were just deal guys early, and they've been doing it for so long and been so successful for decades now, many decades. But you were with them kind of right at the front end of that journey, right?
Well, they ran the sales organization for IHD, and that's where I came into play. So, yeah, you described them pretty accurately. They're definitely risk takers, and they could see big picture, and
but sharp, really, really sharp guys.
They evaluated things that I learned a lot from how they evaluated opportunities. But mostly I learned that as an accountant, you got to get outside of the box here and start taking some risks and think bigger.
But I think that was the one that was so fascinating for me. You had kind of a full life career that was pretty traditional, right? In accounting roles, and you did that, and then you worked for the Lundahls.
Yeah.
But most of those are kind of jobs, right? You don't own the company. You're working for an employer up until what age?
Well, let's see. It was about 79 that I started with Lundahl Astral Circuits. And I went there again as the accountant. And I didn't know much about printed circuit boards. I had looked at the electronics and said, boy, I think this is a growing industry. But as I got into the business and went through the numbers, and I looked at the leverage in our business and the cost structure, and I go, we need to bid these boards differently. So I put in a whole new bid formula. And when I went there, we were less than $1 million. I mean, revenue. We didn't have small.
I'm thinking about these numbers being like, that's such a tiny.
It was tiny.
It's a tiny company,
But again, my life was kind of in segments, and that segment coming from what I learned my other jobs that I had held, and then tying into this and looking at the opportunity that was presented. And I'm going, and I put together a whole scenario of what we could be. Here's a financial model if this happens and this happens. And we were so small that we didn't have a salesman. So I became the salesman. I mean, I'm doing the CPA, the finances.
But you're how old at this time?
Oh, let's see, 79. What am I? 30, 80, 30. Let's say about 30
years old. Okay, so
30.
still pretty young in your career.
But that's when the light came on, and I'm going, look at what we can do in this business. And you go back then, and there was maybe 1,500 printed circuit boards in North America. And when you rank us at less than $1 million, we were like, 1,450 or something.
Tiny.
Tiny. But as I went to the trade meetings and those kind of things and listen to the big guys talk, I'm going, I think our strategy's got to be different. Here's where we can win as a tiny company, and move up that, because being fairly competitive, I don't like being ranked at the bottom, and just from a personal business finance, if you're not the first top 2 or 3 or 4, you got to get crushed. So we had to move. And so I began going to visit customers, got feedback on what we needed to do, what capabilities we needed to have. We started putting those capabilities in place and just growing the business. And I started out there in 1979. I became the CEO in 1987.
So you're what, 37, 38?
37, 38. Should have ran these numbers earlier. And then as the CEO, eventually it became important that we continue to invest in the printed circuit boards. Now I'm working for the Lundahl family, and they had other business ventures. And so we had to slow down the dividend process to their other ventures, or you had to sell the business.
To reinvest.
So we talked to Cordell, who understood that, and the Lundahl family were great to me. They let me buy into 10% of that company. So eventually we said, let's sell the business. We found a private equity firm in Florida, Trivest, who came in and bought the company. And I rolled all of my ownership into the new business. And part of them buying it was, of course, a business plan that I put together. Was grow organically and also make acquisitions, right? And I put that plan together. And it worked. I mean, the nice thing about it is when you're putting it together, you think it would work, and then when you execute it and it really does work, that brings you a lot of satisfaction.
But it's so fun. Like, I'm 43 years old today, and so when I'm hearing this story, I'm putting myself in your life at the ages. And I had a similar experience where I worked for a company, Vivint Smart Home. Until I was 38. So I worked there 15 years. And I kind of needed those 15 years. I think if I would have gone out on my own earlier, I wouldn't have had the seasoning or the skill or the experience and so I've thought about that a lot. I see these entrepreneurs that are 19 years old or 21 years old, and they just hang their flag and go do it. I'm like, I don't think emotionally, for me, I would have been ready. Those life internships, I kind of needed them. And so I'm hearing your story about the engineering and then going and learning the accounting and actually being the CFO and then transitioning into the seat where you're the CEO and then actually having an experience where you take on private equity and you take on that third partner. And it's interesting how, like, sequentially, they kind of have to happen in sequence. You know what I mean? Like, you can't do one before the other. And I think it was when we were talking the other day, it was so fun for me to hear that sequence getting ready for like the second act. Because this experience you had the first time kind of teed up the second one. Where you're like, we did it and it went really well and it was a really good outcome. Could we do it again? And could we do it bigger? And so maybe talk to me about kind of the process from taking on private equity to executing your business plan to exit. Like, how long did it take, and what were the things that you learned?
There are probably 3 phases to my career, and we talked about the first phase, 5 years, which is laying the foundation of those jobs, and then getting the second phase started with Lundahl Astral Circuits. And that lasted about 19 years. But that's when after I became the CEO and put that business plan together, and then the private equity guys invest in us, and now I'm sitting there with my business plan, and I went to sleep that night going, now I got to make this happen. That's a whole different feeling rather than selling the company.
It was a dream, and now it's
we got to live up to this. And so we made an acquisition kind of the following year. I expanded. I doubled the size of the facility there in Logan, Utah. We went public as Electrostar at that time. I took Electroetch that I bought in California and Lundall Astral Circuits, Electrostar. We went public.
And you went, how big? Like, what was the total market cap?
At that time, I think we were like $80 million in sales.
Yeah.
About 80. But kind of small, but back then it wasn't uncommon.
To go public, you could go public smaller back then. It's
then.
Way less common today. Like you kind of have to be a bigger company to have it make sense.
Yeah, you couldn't go public at $80 million today by any means. The cost structure would be too much.
Yeah.
That couldn't get the attraction to have people invest.
Yep.
But let's see. So after that, and we went public, then I needed to expand more. And I was looking to buy an aerospace and defense printed circuit board manufacturer because that is where there is a more stable revenue, a more stable backlog, and it's a higher technology.
Yep.
And so I talked to Tyco out in Connecticut and said, "I'd like to buy your," and they said, this was back when Dennis Kozlowski was running Tyco, and it was a deal a week kind of thing.
Yeah, they were going.
They were going. They came in and made a cash offer for us, and so we sold the business to Tyco. And I worked at Tyco for about a year and a half, and then decided that
good outcome for you guys.
It was great. I mean,
price. It was fair price. Good outcome.
8.5 times our original investment. So it turned out.
So Trivest, they were ecstatic.
Yeah, we were, when you listed their return on investments, we were always at the top of their fund. So and then Tyco bought us. I worked there for about a year and a half, and then decided, I'd been the CEO, and I had all this energy to accomplish something, and so I left the company in the summer of 1998.
Yep.
And I'm thinking, I was 48.
Yep.
At that time, and I'm thinking, I've hit the home run. I don't really need to work, but I need something to do. But I'll take a couple of 3 months off and see what's up.
Yeah. What was that process like? Because I've experienced that at different points. I've had different kind of liquidity events that kind of cause some reflection. Yeah. They're kind of these interesting inflection points where you say, "Man, I've been grinding for a long time.
Right.
Do I want to keep grinding, or do I want to retire?"
Exactly.
Yeah. So what was that process? Because I'm like, you're 48 years old. You've been going hard for a long time.
Well, it's you described that right. I mean, you're driving hard all the time, and then you decide to take some time off and see what else is out there.
Yeah.
And after about 3 days, and your phone isn't ringing, and you're not an important guy anymore.
So was that hard? Was that hard for you? Like, did you find like a lot of your identity is, I'm a founder, I'm the owner? Like, you took a lot of pride in being the CEO.
Probably too much so, because that was about my whole self-worth was tied into being the CEO.
Yeah.
And so I left, and after about a week, I'm going, I don't know, this might not last. And so I called the private equity guys up again.
That quick?
I said,
in a week?
In about a week. I called them up, and I said, "Look, I've left Tyco, and I'm just looking for something to really get involved with again." And we talked about a company.
If you called me, if I'd invest in your company, and you called me, I'd be like, "Hey, where do you want to go?" Well, yep, I got the money. Like,
well,
pick the acquisition, and we're ready. You know
said,
what I mean?
It was a home run the first time around. We can do it again.
100%.
Right? And we looked at companies, and they had already made some contact with Pacific Circuits up in Redmond, Washington. And so I helped them with the due diligence to the end of, I think, November. And then we bought that company, Pacific Circuits. And that was the beginning of TTM. But I had an agreement where I couldn't become the CEO until March. So I had another, 3 months.
Kind of non-compete type stuff?
Non-compete kind of thing. And Tyco was a little, they enforced that kind of to the letter. So anyway, I started up there with the private equity folks again.
Same group.
It was the same people, different group, because Mike Moran and Peter Brockway Jeff Getman had left.
Started their own.
Started their own.
So tell me about that, because I think that's interesting. Tell me about like the importance for you of a great partner.
Oh, I don't think there's any substitute to having the right partners. I mean, most partnerships, when you look at them, they probably don't last for some reason. And with Mike and Peter Brockway and then Jeff from Thayer Capital, two different private equity guys invested in the company. And I think it was one of the first ones for Mike at Brockway Moran. But we had worked well together with Electoral Shar.
So kind of less diligence needed. You kind of knew what you were going to get.
Which is crucial because, private equity guys, particularly back then, there were a lot of short-term vision type people.
No, my good buddy just sold to private equity.
Uh-huh.
Great company. He still owns a third of the business.
Yeah.
Gets fired 9 months in. Kind of a dumpster fire. Like terrible communication, terrible execution. And you're just like, man, what a waste. He's got a great company, still owns a third of the business performing well, but you got some egos.
Mm-hmm.
And you're like, man, that partnership's really important, that annulling that marriage, because they're still partners. You know what I mean? Like you still have the same company, but now you got to go. And you just never had that. You had great partners that believed in you and got behind you. And
it was helpful that I helped them hit a home run.
Yeah. So they had a lot of confidence.
They had a lot of confidence. Yeah. And the great thing is that when we sit down and said, here's where we want to go with the company, it wasn't a short-term kind of vision. They're not going to come in and destroy companies.
Yep.
When you buy a company, you're really buying the people, the expertise 100%. That they have there.
Yeah.
And if you think you're going to come in and cut costs and trim that up, you kind of break some things. And you want to fix companies up, but you don't want to break what's really working. And so you're buying companies and their ability to produce money. So don't mess that up.
Yeah.
So I think we worked well before. We work well now with the TTM. And it was 6 months later we bought another company down in power circuits down.
So you guys
in Southern
didn't
California.
Wait. You guys just jumped right into that playbook. Yeah.
We started in 1999, and we bought power circuits. I think later that summer, and a year later, then we took TTM public
in 2000.
In September of 2000.
So you were in like the peak of euphoria.
Yeah. And what was nice is that was the .com bubble and all those kind of things. And I remember going on the roadshow saying, look, we actually build something. We manufacture in the United States.
Did you get the same love in your IPO that the .coms were getting? Was it just kind of a rising tide was raising all boats? Was it pretty easy to get out at that point, or was it?
We made 60 presentations in about 10 days, and 59 of them bought.
Wow! So it was just
it was great.
Yeah,
because we're kind of associated with the .com. That we're technology,
100%.
But I think investors could diversify a little bit with us, and so it was really a home run. It was a lot of fun. We went public at $16 a share, and within a month we were at 23.
Wow! So just took off.
It was going like gangbusters. But then the .com bubble burst, and now we became a global competition entered. So China came in the 2002 and took a lot of the business of the printed circuit board out of the United States to China. Our business in 2000, our industry was $11.3 billion, and 2 years later it was $3.5 billion.
So everybody was going out of business.
It was a tough time. But what we did with the funds on our private equity, on the IPO, is we paid off the debt. We had $100 million. We paid it all off.
So you guys didn't have any debt on your balance sheet?
We had some, but not
much.
Not like we had prior to going public. That that we used to buy the company.
Yep.
So that was smart because now we had a strong balance sheet.
Yep.
Which has always been part of what I wanted. It was a strong balance sheet, coming from Cache Valley. And
yeah, you're just conservative. Yeah,
I'm a conservative guy.
Yeah.
And you're conservative, which is a good fit for the printed circuit board because you got technology going and coming.
You got to be able to weather some storms.
You got to weather some storms. So I think that was one of the strengths we did, had a strong balance sheet. And the other thing, strategically, we found our niche. We didn't go in to high volume, low margin work that left when China came. We started focusing on engineering support for our customers, smaller lots, quick turn, just areas that the Chinese couldn't do.
They couldn't
do. So we survived through that. Part of to show you again how we survived that. When you look at Honeywell in 2003 had some printed circuit board facilities that they just wanted to get rid of.
Yeah.
And so we looked at that. They had 6 facilities. We said, no, we don't want one. They went away. They came back, said, we're down to 3. I said, I only want 1 facility. It's this facility because that's the technology that we need that fits us. And they called on, I think, around Thanksgiving of 2002 or 2003 and said, if you want it, it's yours. So they basically gave us that facility.
They just wanted to be out. They were
done. They
taking
said
their losses.
You had to close the deal by December so they could take the tax losses. And we were in a position to say, okay, they had too many employees, so we had to narrow that down to 685.
And you guys got
on your dime, not our dime. So they did that. We got, I think, 15 acres. I can't remember the square foot, 150,000 square feet, and another $70 million of revenue, doubled the size of our company.
For free.
I mean, that's how bad the industry was at that time.
Isn't it crazy? You go back, and I'd love to hear your perspective on this. There's these countercyclical moments where it feels like the most money a lot of times is made in the worst times. You hear these, adages of the best time to invest is when there's blood in the streets. And you look at that and it's like, that's a really lot of destruction, a lot of competition. And that's either going to go really good or really bad for you.
Yeah.
Sometimes when you buy it for $1, that's a bad buy. You're just getting the old maid card.
Mm-hmm.
But for you guys, it ended up being like a backbone of your company. You doubled your revenue, positioned your company really strong. Tell me about that. Like, how did you know, hey, this is strategic and this is the right move for us?
I think when you looked at the capabilities that we had and what chip falls, we call it chip falls.
Yep.
What they had higher layer count, higher technology. They had a customer base of like Cisco and IBM, high technology companies that we would not be able to get into for years. So from a customer base, it fit.
It projected you forward.
And then we had quick turn. They had high tech. Now you can be a one-stop shop for your customers, which worked to a T. Now, I remember when I got the first income statement a month after we bought it, I'm a little nervous because I'm going, what have I missed? Is this too good to be true kind of thing? And I remember getting that email, and I said, I'm going to lunch before I open that because I'm going to calm down to make sure in case it wasn't what we thought.
But where are the skeletons in the closet?
Yeah, what happened? What did we miss during our due diligence? We looked at them for quite a while, so... But it was a positive income, which they hadn't had forever.
Wow.
And, the nice thing about that particular acquisition, and that they all got to fit your culture. They all got to be, you're talking about partnerships. You're partnering when you do an acquisition, and you're going to get married to those companies. They got to fit culturally wise, which they did. But because we were the white knights, if you will,
they're going
to close it. So
you're saving the day.
So I'm looking at their benefits, and they're a lot bigger than our little tiny company, and with vacation days and holidays and all that. So I raised ours a little bit, trimmed all that, cut the vacation, and we trimmed out quite a few benefits in order to make it sure that we could survive. But we were able to do that because we were saving their jobs.
Yeah.
So it was a perfect opportunity from that
to make those changes
on that particular acquisition.
But my experience with acquisitions is they're so finicky. And like, it's really tough to merge cultures.
Yeah.
It's really tough to bring two cultures together. Like, which ones didn't work for you? When did you screw it up? When did you go do one that you just said, I think this is the perfect fit, and you do it and you look back and just say, I missed it?
You know, we didn't do that many acquisitions, but every one we did worked out well. I didn't miss.
It's incredible.
I didn't miss on an acquisition. But the main thing we looked at was, how do we fit together? I mean, do we have complementary capabilities? Do we have Can we enhance that business? Can they enhance ours?
But I've done that same analysis, and we've merged businesses.
Yeah.
And then you look back 2 years ago and be like, oh my gosh, this is a dumpster fire.
Well, I think with, the next acquisition I did was coming back and buying Tyco, that I sold to at Lundahl.
Bought your business back.
I bought it back. But then by then they had expanded. They have 9 facilities when I bought them back, including the 2 that we sold them.
Wow.
And there again, that was a little different acquisition, because I knew
you knew that one.
I knew that company. I'd run those companies before, and I knew a lot of the players. So I knew how to fit it together.
Yeah.
And in that particular one, when I looked at the leadership of Tyco and the leadership of TTM, they had strength in sales, they had strength in IT, stronger than us. So when we merged it together, the leadership was almost half of Tyco and half of TTM.
Wow.
And so when you talk about how do we come together as a team, you got the leadership that came from 2 different places.
But so much of that is you as the leader, letting them know, hey, we got to work, So how do you do that? How do you bring people together and say, hey, now it's a new this is new team.
Yeah.
This isn't Tyco. This isn't,
right.
our company. This is new company. And because my experience is that's really hard.
I think it all starts with the vision. Where do you want to be? When you put these 2 companies together, 2 years from now, 3, what do you need?
Yeah.
And what's our strategy, and how are we going to get there? Here's a vision where we want to go, and you talk about that incessantly, because that's how we're going to get there. And here's the strategy that we use, and then here's the goals to get there. And you talk to all the team and saying, this is where we're going.
Yeah.
Here's how you're going to help. You're a big part of that. And you make people feel important, right? And you're going to help us accomplish that, or you might not work here because we're going, so get on board kind of thing. Well, that's a little more draconian than it might sound, because when people saw the vision, and we'd set up incentive comps to
talk to me about that. That one has been what I've felt. If you get that right, it brings the team together, because you're driving for the same metrics and you win together.
Yeah.
And if you screw it up, it feels like people start moving in directions that the company doesn't want to go based off the incentives that you put in place, sometimes inadvertently. You know what I mean? Yeah.
The incentive plan that I put in place way back with Lundahl and Astro Circuits was everybody's on a plan. They're at different levels, but every employee has a certain percentage of their salary that they can make, or their hourly pay.
Yeah.
And it depends on the performance of the company. And so it was the funnest thing when we had our quarterly meetings to announce to the employees, here's the pay that you get. Here's what we achieved. And on the other hand, when we didn't achieve it, it says, here's why we didn't achieve it. Because this and this and this happened. These are under our control. This might not be. So let's control what we can, and let's work together. It's just like a team, right? The team works together. You got to have talented people.
Yep.
And we had great talented people. And sometimes I had to make a decision between talent or team, right? And early on, I would choose talent. Later on, I'm choosing team.
Culture.
Yeah. I'm choosing culture, because if we're all working together, it's fun.
Yeah.
But if there's infighting, or somebody thinking that they're more important than somebody else, or whatever, then you're going to lose. And we had our strategy, and then we had the culture. And the culture is, we're going to take care of our customers. And we're going to have motivating employees to take care of the customers because we had to execute.
Yep.
It's all execution. It's a little bit blue collar. And I think when you looked at printed circuit boards early on, a lot of the analysts looked at it as a commodity because you got the toys have circuit boards in them. But we didn't. We weren't going to be in the commodity business. We wanted to be high tech, and be where we could provide something that has limited competition and be the leader in that space.
How important is it as a leader to identify where you're going to compete?
I think it's. I mean, if you get the right strategy, which is where you compete, you get the right team that can execute on that strategy, and the right culture that allows the team to execute, now you're going to win. And without those three building blocks, I think you're going to stumble.
Yeah, you can't do it.
You're going to stumble.
No, it's so fun to hear you talk about it because you take an industry that's commoditized.
Yeah.
And you found a way to not be a commoditized product, to not be fighting for the cheapest price.
Yeah.
But to be able to charge, a fair premium to go create value added work. And that's hard to do. Like that. You have to be very disciplined, and you've got to be disciplined on what you say no to.
Exactly.
I think there's a temptation to be all things to all people. You know what I mean? There's revenue to go get, there's business to go get, you could go get it. And to be able to say, no, we're actually going to say no to this revenue. Yeah. To say yes to this revenue takes a lot of discipline.
And we weren't always perfect in that. But you talk about partnerships with private equity guys and running the company. It's also a partnership with your customers.
Yeah.
Are we going to have a mutually beneficial relationship here? Because we're going to try to make you as successful as possible because that helps us. So that was always how we dealt with customers is a mutually beneficial.
You saw them as a partner.
We saw that. Now, it wasn't always perfect because customers, sometimes they can't keep their hands off the lower price, and that's where we have to have the discipline or convince them otherwise. Yep. But if you're in the right space, like we were talking about aerospace and defense and high technology, where you're the leader.
They're less price sensitive. It just needs to work.
Yeah.
You need to be able to deliver consistently.
You can deliver, and then early on we can survive. I mean, I talk about the industry.
Yep.
It was motivation to survive as it was as much to be successful.
I was with a guy yesterday, entrepreneur, young founder, just sold his insurance business for a lot of money, a couple $100 million.
Okay.
And he talked about building this business from a independent broker to a 5,000 person brokerage. But it was literally the same conversation that me and you were having. He's going through 2008, 2009, 2010, short selling a house, living in an apartment, but seeing a niche to go into Medicaid, Medicare, the changes in Obamacare, and seeing a niche that it's like, oh, this is going to change insurance forever.
Yeah.
And no one's actually, and it's stable and it's consistent and it's less price sensitive and it's more about, and so he positioned his business to go be the best in that space and end up building this beautiful, resilient, consistent, almost recession resistant business. And it was fun to listen to him because this is a guy dropped out of college.
Yeah.
But he's smart, and he knows his customer.
Yeah.
And he just paid attention. And I think what you're describing is that it's having a relationship with your customer and being a partner. And then sometimes it's like you have to, because you're going to have people that say, sweet, I'll just pay less and go with your competitor.
Yep.
But a lot of times they come back. You know what I mean? And they come back as a better partner because they take for granted some of the things that you were delivering on that maybe you weren't getting credit for.
Yep. And sometimes when they come back, it's a crisis because where they went did not work.
Yep.
And so now
you're saving the day.
I'm saving the day, but I'm also at times charging them money depending on the separation, how that went. But it's the same. But it is an opportunity to say, we still love you. We're still important. So we're going to do this. But longer term, we'll get you out of this bind and we'll figure out how to make the relationship work longer term.
So navigate through a really tough, post.com, you know, anybody living, and you've lived long, you're how old at this point?
76.
So you're 76. So you've seen cycles.
Yeah.
You've seen Black Monday, or Black Friday, you've seen the .com bust, you've seen the global financial crisis. You know, talk to me about managing through crisis.
Yeah.
And what you learned as a leader through that process.
I think when you go through crisis, you need to have, like you're saying, a perspective that don't panic. You know, don't get caught up in making some foolish moves. Just stay the course if you've got the right course, or if you don't, then adjust. I mean, sometimes you go through those things and you experience that, gosh, we need to modify where we're going.
Yep.
And we always had a strategy, but we were tweaking that constantly because the world was changing, right?
Yep.
And so it changed rapidly sometimes. And sometimes I felt like I'm being drug along instead of leading the charge. But you have to be flexible and adjust to those kind of things. And don't panic. So I think I mentioned that when we went public, our stock was 16, went to 23, and then 2 years later, the industry had changed. Our stock was $1.40.
Isn't that crazy?
And I went from kind of being
done. Yeah.
Well, I was kind of like when we were 23, I'm getting accolades as the CEO, the smartest guy in the world, and when I'm $1.40.
You're the dumbest guy in the world.
I'm getting,
oh, yeah.
I mean, the employees' bonuses went away. The shareholders are mad. The private equity guys aren't happy.
It's so hard.
It was tough.
Yeah.
It was tough. But at the same time, you say, this can't last, right? It's not going to last.
But I want to press you on this combo. How do you lead? I think anybody can be a great partner when the sun is shining and stock's at 23 and things are going good. Yeah. You learn about everybody when the stock's at $1.50.
Yeah.
People will, but like, you know what I mean? And so like, how do you lead in that environment?
Yeah.
Like what did you learn? Like what are the principles that you had to govern or had to operate off personally? One, I think even to manage your own psychology, like you're not immune to, hey, my net worth was this and it's a 10th today. And if you're, you know what I mean? So how do you deal with the human stuff outside of the business stuff?
Well, and it was, you know, the way we structure our pay is because on the key executives, the salary was about 25% of their pay.
Yeah.
And the bonus was another, 30-40%. And then the stock was another chunk of that.
Yep.
So when you're going through these tough times, not only it's a double whammy a little bit, right? Because now the bonuses have gone. So you got employees that the bonuses have gone. At the same time, I think you need to communicate your positiveness through this tough time.
Yep.
And you do that the way you interact with employees on the floor, the way you interact with investors, all the way through. And it's basically saying, look, we think in the industry that we have the right formula. We still have. You can't give up on that. And I'd like to say I was perfect on that, but I wasn't. And, and at the same time, through all this, I'm working on the company, making the company better.
Yep.
But when you go from running a $1 million company to when I retired, $2 billion company, I'm not the same CEO. So you
had to grow.
I spent, as much time fixing me as I did the company.
What did you do? Like what did you do to develop personally?
Well, I just read leadership books because I came from Cache Valley, right? There's a little bit of a bubble in Cache Valley, and in high school I was kind of shy. I mean, a girl said hi to me, I'd panic. You know, I'm not out there, but I also always said I can be more.
You just stay curious? Do you just say like I'm going to keep growing forever?
Well, I don't want to lose.
Yeah.
I am not going to lose. I don't care what it takes. I'm going to grind this out forever.
Yeah.
And I'm going down with the ship if we go down.
Yeah.
But I am not going to lose.
Yeah.
And here's what we got to continue to do this. And And we, when we bought Chip Falls, I think that was a sign that we're doing the right thing,
Yep.
right? Because now we doubled in
Yep.
size.
Yep.
And so I just think you have to stay the course and change where you need to change.
I know for me, like, so my personal strategy, I had a mentor when I was really young that basically kind of converted me to say, you need to learn forever.
Yeah.
So started reading a book a week.
Mm-hmm.
And I've done this for 20 plus years, and I'm a different creature today.
Yeah.
Than I was 20 years ago. Just you add new ideas from the best thinkers. And I think living in 2025 is such a gift because we have so much access to the best thoughts and the best ideas and the best practices.
Yeah.
But I started going back to Harvard and doing their executive programs.
Mm-hmm.
And it was just something where I said, I'm going to put time, money, and energy into this every year and pick a subject, whether it's finance or strategy or negotiation, and just try to get a little bit better. And what you're describing is like, if you don't grow,
you got to grow.
You end up being the one that is capping the company's potential.
Mm-hmm.
Because if your lid is only here, if you're a $2 million CEO and the company goes to 500, or you end up being the thing that's holding the company back.
Yeah.
But I think that's like, it takes humility. Like, I think your pride would tell you, you're the man. You've done this before. You've sold your company. You've got some, you know what I mean? And so like, how did you, was that ever a factor for you? Or were you always just like competitive enough that you just said, I've never got to the top of the mountain. I'm going to keep growing.
I mean, when you're in the printed circuit, there's always the next level.
There's always something.
Always something.
Yeah.
And so you're always in a process and you're always winning.
Yeah.
And I back then I would read a book. And I would go to on every other Wednesday, I'd get all the executives together and I'd give them a summary of the book that I read.
How cool is that?
It was great. I mean, it was great because I needed this to grow.
Well, it's a forcing function. It forces you to teach it. Like, there's a difference between consuming it passively and teaching it. You know what I mean?
We need it as a company. The company's got to get better. So the knowledge that I was gaining, that I wanted everybody to have that knowledge so that we could do better. Right, so I did that, and you're right. I'm 76. I still like to read. I read all the time. The challenge I have is I can't go apply it like I used to, and I miss that part.
My grandma grew up in Afton, Wyoming. Moved to Cache Valley when my mom was, in high school, and 14 kids.
Yeah,
very thrifty family. She died when she was 95.
Mm-hmm.
And my mom got her scriptures. They're next to her bed, just marked up, still being marked up at 95 years old.
Yep.
And when she's 77, her husband passes away. And she decides she's going to go learn how to play the piano, and gets a teacher to come over and gets a piano and is playing it. And, I didn't realize it back then. I'm one of 100 grandkids, but it's impacted me so much because I think about this legacy. I think about this legacy of continuous learning in this example. I remember get this little packet of cash from my grandma. She passes away. And I'm one of 100 grandkids. You got 14 kids, all big families.
Mm-hmm.
And there's a couple $1,000s of cash.
Yeah.
That she'd been so thrifty and so industrious and so resourceful that she was a multimillionaire and has this cash and has these apartments and has this, and she just, kind of leaves. And I hear what you're describing, and I'm like, there's just these people who never stop learning and never stop growing. They're just a gift to everybody that they touch.
Yeah.
Because you share it, and you know what I mean? When I'm around people that do that, it makes me want to go do it. You see people that are growing, you're like, it's a reminder. I need to keep growing. I need to keep pushing. And the opposite's true. You're around people that aren't growing and you kind of get stuck. You know what I mean? And I'm sure you saw that in very blue collar industry. There's probably a lot of pieces of your business that they're not growing.
Yeah.
They're not pushing it. They're not progressing. And as a leader, it's instilling that that value in the culture, that we are a growing, learning, innovating culture.
Right. And it starts with the leader, right? The leader
can't not start with the leader. Yeah.
Sets the tone for we're going to get better, and each one of the team members is going to get better, because
you can't say it. You have to be doing it.
You gotta do it. And the thing is that if you're running a $1 million company, your team is different than a billion. And people, some people came with me all the way through, and some people couldn't go. So I had to change the people,
which is hard.
It's really hard. We've accomplished a lot together, but to get to the next level, sometimes they didn't change.
This morning, I'm doing burpees, and I had a friend that gave me a challenge a year ago to do 100 burpees a day.
Yeah.
So I start doing it. So I'm in my bedroom, and my son comes in. I got a 4-year-old son. And I start doing my burpees. My son gets down next to me and starts doing the burpees. And it was this kind of visual example of, oh, wow, your kids are watching.
Yep.
They're watching. You don't tell them what you're doing. They're watching what you're doing. And your employees are watching.
Same thing.
They're paying attention.
Yep.
And it's fun for me to hear like these. Yeah, because, I mean, you're a Cache Valley boy that was running $1 million revenue company at 37.
Yeah.
A $2 billion company at 57. It's a way different universe.
It's a whole different deal.
You know what I mean? And so it's fascinating for me to see how you bridge that gap, how you became, I'm an M&A guy, I'm a private equity guy, I'm a culture guy, I'm a leadership guy that brings groups together, I'm an incentive, I'm a strat. Like, those are different things. You're not that person running $1 million revenue company.
No.
You're just trying to survive. You're trying to go get a customer.
You go from trying to survive to really competing.
I'm the salesperson. I'm doing all the dishes. I'm making the meal,
And there's a transition, because back when I was doing the sales and the accounting and all the administration, and then we get to a point where I need to hire a salesman, I'm going, I don't think there's going to be any way he can do what I'm doing. And lo and behold, the guy did a better job.
Yeah.
And all of a sudden, a light comes on here saying,
I got to delegate. I got
to delegate.
I got to become a better
I got to learn how to delegate, because that was another step in evolving, because it was hard to learn.
But there are also steps that me as an investor, I see leaders not be able to take that.
Well,
they're really good small business owners that have a tough time transition to be a bigger business owner.
It's a hard thing. Yeah. And you're reinventing who you are as
skills.
the CEO.
Yeah, it's new skills.
You're constantly reinventing. Yeah. And it's all because I'm involved in the game, and I'm not, I want to continue to grow. I mean, you look at TTM today, and, we're the largest in North America, probably 4 times the number 2 guy.
Wow.
And then globally, we're probably in the top 5. So we have done extremely well with our strategy. But, you talk about, again, staying humble. I mean, you never know it all. If I ever thought that that I'm arrived, just let the phone ring. And all of a sudden, no, I haven't arrived yet.
Yeah.
Right. And I go back, way back, and we had, I have a meeting, and our night shift people say, how come you never see us on night shift? And I'm going, I don't go to night shift as much. So I grabbed my engineering manager, and I told him we're going to come out and work on the plating line for 4 days on graveyard.
Yeah.
And so he didn't want to do that, but we went and we actually worked on the shop floor for almost, 4 or 5 days out there on the shop floor. And that did more for the motivation of that graveyard shift to see that we were there.
Yeah.
And thank heavens we didn't screw anything up.
What did it do for you? Like, what did you learn about people that are working that shift?
Yeah, I mean, you get a vision of the graveyard shift as just the people that, maybe they are having a hard time getting a job anywhere else, or this is all, But you go and you learn that every person has value. Every person has a story, right? Yeah. And you can learn from everybody. I don't care who it is. You can learn from anybody about almost any topic, right? So Just that caring about people and knowing that you're going to do what you can to make their life better and their job better. And I found, too, that people like to be part of a winning team.
Of course.
I mean, you see it on football. You get the 80th ranked team going number one because they won a game. They love to do that.
Yeah.
And I would tell our employees all the time, when you're working in circuit boards, you're already a winner.
Yeah.
Because this is a tough business, and you can't be a patsy and work here. Just because you're here, you're a winner. And then when we'd have our quarterly bonus sharing, profit sharing, we're winners here. Let's keep it going.
It's going.
And everybody, and I would say it's not because of any one person. We did it together as a team. And when you have that philosophy and you do make an acquisition, it just carries right through, right? And some people on the acquisitions didn't fit, or they didn't like it, or they didn't like the new role, and they would leave. But we already had depth that could replace that, so that we're all going to win, and we're going to win together. And I define what winning is, right? And I love sports. You love sports. It's pretty clear to see what winning is on the football field. And I just applied that same principle. It's not as obvious, but when you look at what we accomplished at TTM and where they are today with my successor CEO, and now he just retired, and we got our third CEO.
Wow.
And he's carrying on. So, and I think that's the other thing, Casey. It's not about any individual person. It's about the company.
So that and I think this is like an interesting combo, because your pride would tell you that you're so good, or you tried so hard that you're irreplaceable.
Yeah.
But what you actually need to build is something that's bigger than you.
Exactly.
Like if you build a culture and a team and processes and systems and a company that when you leave it does better than when you were there, to me, that's the sign of a great leader.
Mm-hmm.
It's not this superstar individual that, just moves the world, but that person's so key to the success that if they are gone, the wheels fall off the bus. It feels like that's not an investable company. That's not when I heard your story the first time, I kept kind of going back and just saying, you've got to be so proud of what you guys built together. Like that, this company's a great company, and you navigated some storms. You navigated some hard times in a commoditized business, and you found a way to make a commodity business and product not commoditized. You found a way to make it service-oriented and niche and high value, but also like when you left, it was worth $2 billion.
Yeah.
Today it's worth $6 billion, and so something happened.
$7 billion,
but there was something in that culture that allowed it to just continue to thrive and grow. Maybe you can pinpoint it, but it's got to be something you're so proud of.
Exactly. I'm really proud of TTM and where the company is today. It wasn't just me. I mean, we had good people.
You had a great team.
You're not going to get there without really good, motivated people. And you go back to the culture. And when you look at the decisions that we made or I made, it was always, how do we make the company better? It's not about how do I make me better or you better.
Yeah.
It's the company. It's always the company. That's the vehicle that we all benefit from. So it was always to drive TTM. People would say, you're the CEO. You can kind of do what you want. You're the boss. And I'm going, I'm not the boss. The company's the boss of me. I might be the CEO, but I skipped vacations. I was in Europe. I left my wife in Europe to come back for business. That's the dedication to making the company successful.
Yeah.
And you're the CEO. You know this. I mean, it's not an 8 to 5 job. It consumes you.
It's everything.
Right? It's everything. It's 7 days a week, 24 hours a day. It's always on your mind as to how we get better. How do we solve this problem? How do we overcome this obstacle?
Yep.
All of that stuff. And you lay that culture. And I ran into an individual who's the HR manager of Logan, that he came after I had left, but he knew who I was.
Yeah.
And he said, hey, I just want to thank you for what you built at Logan. He says, I've worked at a couple other places. I just love working for TTM at Logan.
Yeah.
He says they care about the employees and they make the right decisions, and it's a growing business. I mean, even that Logan facility is going to be probably $100 million.
Wow.
I mean, that's pretty good for Logan.
Incredible.
And when I started TTM, I told you we bought Pacific Circuits in Redmond. I got an apartment in Redmond, and we never sold our home in Logan because I still had grandkids running around here. So every week for 14, 15 years, Monday I would fly somewhere and come back Thursday or Friday every week.
It's interesting. We're both sports guys. We love sports. And this off season, you've had Coach Whittingham. That, he's been at Utah for 21 years and done such an incredible job with that program. One in the Pac-12, one in the big, incredible coach. But there was a feeling that he was kind of getting pushed out.
Mm-hmm.
The alumni wanted him out. People wanted him out. And he's 67 years old. And I think there's a feeling of, hey, just go right off into the sunset. Go play with your grandkids, and I love watching behavior. And you see this guy, and I don't know Coach Whittingham. I'm a fan of Coach Whittingham, but I don't know him.
Mm-hmm.
That just says, I'm not done yet.
Yeah.
Like, I'm really good at what I do.
Mm-hmm.
I love what I do. And I'm going to go see if somebody else thinks that I'm good at it. Yeah. And then you got Michigan that comes and scoops him up. And he's put an all-star coaching staff together.
Mm-hmm.
But it's fun for me to see a guy who's 67 years old that says, I still have more music to play. And I want to see how big I can take it.
Yep.
And this guy spent his whole career in football that says, I want to go see if I can win a national champ. I don't know if I can, but I know Michigan has. They got the bones. They got the ingredients. They got the support. And I want to go. It's fun for me to see that. You know what I mean? And you're not Coach Whittingham, but you had a similar experience where you could have sat on the sideline and wrote it off. Yeah. Logan's great place to live. You had grandkids, but you chose to go see what you could actually do, how big you could go take it. And I think that there's an element of like, we got one life to live.
Yep.
What do you want it to be? And it's, anyway, your story is so inspiring to me. I love seeing people that, are maybe a decade or 2 decades or 3 decades down the road from where I'm at that have made choices and how those choices have played out. And it's fun for me to see that crossroads of I could stop or I could go. And I want to go.
Yeah.
I want to go see what I can do and get back in the grind and get back in I'm going to go stay in an apartment in Redmond, Washington. When it's a lot more comfortable staying in your bed at your house in Logan. You know what I mean? And
I know.
And these are trade-offs. There's sacrifices. It's time away from kids. It's time away from family. It's that. And so, how do you think about that? Like when my wife, her really good friend, her husband passed away unexpectedly this last week. Major tragedy.
Yeah.
That's going to come to all of us. All of us are leaving this earth, whether it's next week or 20 years from now or 50 years from now, like all of us, our day's coming. But when you fast forward to that day and you say, hey, when people are coming and talking about Kent, what do you want them to say? Like what legacy? What do you want your legacy to be? What do you want people to say? Hey, he was this. Kent was this.
Those are good questions. Now that I'm older, I start to think about that a little more. But I mean, the number one thing I hope that they say is he made a positive influence on my life. He was a positive factor in helping me be a better person. And at all the employees at TTM, hopefully we make them better individuals in life.
Yeah.
Not only just at TTM, but better people. And when I left Tyco, and I didn't know what was out there, but I thought I had more time to figure it out than a week. But my gosh, not doing anything. When you got gas in your tank, that Whittingham says, and I was just, fortunate that the opportunity.
His turn was kind of like your turn. it went 2 weeks, 3 weeks, and he was back in the grind.
And he's back doing it at Michigan with a big contract. Sometimes you don't know where the future is, but if you're ready
But you knew in your heart.
I knew
I want to keep going.
I kind of knew in my heart, but I wasn't paying attention because I knew that I knew I didn't want to work for Tyco. And, that just, the culture wasn't.
It wasn't. Yeah.
So I thought now's a good time before winter hits. You can get outside and golf a little bit, but get my handicap down. But that lasted a week. So I think too. I think it's like, accomplish all you can, right? Don't leave. Don't have any regrets. Try. That became a big thing of mine too. Is when I'm going with Tyco, I'm going. And sometimes you go, well, what if this one doesn't work or whatever? Yeah. You go, well, try. Don't if you're gonna mess it up trying. Don't mess it up on the sidelines. I like what my wife has, and she tries to put this across to our kids, and she has a theme that says "Dream big," and that's her theme. And she's got another one that says, "I hope you dance," coming from a song, which means dream big and get involved. And I have one son who actually decided to get a tattoo, and you know what he put on his arm is "I hope you dance" from Donna.
Cool. That's super special.
So, it wasn't just me. It was Donna,
of course,
willing to let me venture out.
That's a whole different conversation. It's a long conversation.
Yeah.
But maybe touch on that. How important was your relationship with Donna to you having the career that you had?
Yeah. We had 6 kids. And we had 6 kids in about 9 years. Once we got rolling, I don't know what the heck happened there, but she was a great mother. She didn't work. She raised those kids, and she was the leader in our family. And I never let work override our family. That always had priority.
Yeah.
So I might have 100 things to do, but I was coaching them in Little League, and I was coaching them in soccer, and I'm coaching them in basketball, and we went to every activity that we could. And when I started TTM, I might mention my youngest son was a junior in high school. Our family was basically pretty much raised.
Yeah.
Right. So I would have never done this
if you would have had a full house of kids.
Because I couldn't leave home all the time. And so Donna was extremely supportive in that. I think it was about a week after I retired, or shortly after the second time, and she set me down and said, "You're not the CEO of me." Because I'm going, well, what do you mean?
Stop managing
wait a minute, this is new territory for me. I got to learn again.
Yeah.
But, so we had to learn how to be retired. Wow. And, I think when I left Tyco, I still was not done. Did I realize it? Maybe not, but I knew that I wasn't done. I'm going to do something.
Yeah.
And it became a lot bigger than what I anticipated.
Yeah.
And I told Donna when we started moving to Redmond, I said, it's a private equity thing. We're going to work 5 or 7 years, and we can do it for 5 or 7 years, and we'll probably wrap it up and be done. But, the whole industry went to poop, and I'm not going to quit in the middle of that. Yeah. So it ended up being 15 years.
My experience in this, and, I'm 43. I've been through a couple of cycles. I haven't been through as many as you have, but I've been through enough at this point. When I think it's 5 years, it's 10. And that's just how it's been for me. We when Blackstone came and bought Vivint, we thought that was a 5-year, go build it and flip it. And that was what we all signed up for. And it was a decade. It was 10. It was double the time, and it was twice as hard. And ultimately the outcome was great, but it was great because we, committed for 10, and it took 10. It took twice as much, and I think that's what you're describing is there's where you start, and then there's where you finish. And sometimes if you would have known how much work it was when you got started, you may not have started.
You have to think about it.
There's a bit of ignorance that's bliss, when you get rolling, when you're jumping into one of these things.
There's some things you want to think all the way through, and some things you just
jump in.
We're going.
Yeah.
No,
well, you have a beautiful story. I've got a couple more questions. Talk to me about faith, and talk to me about faith has influenced the journey.
I think, of course, I was raised in the LDS church and went on a mission. We were married in the temple, and we have 5 boys, and they all went on missions. And some of our kids are active in the LDS church, and some are not right now. But the important thing to me is the relationship you have. And I'm not going to demand certain things on faith. I'm saying that's up to you to decide. It's between you and God, what you want that to be. But I think faith is an important component of your life. I mean, and maybe different churches have different visions or different rules, but they all have faith. And I think if you're not a faithful, humble belief in God, that's a component of your life that's missing.
Yeah.
And it's important that you have that. Because, this life is a short blip here.
Yeah.
And you have lots of challenges. And being raised in the LDS church and raising our kids in the LDS church, I think that was a real plus.
Yeah.
To have our kids go to church and learn values that they wouldn't learn anywhere else, and have that social structure around them to teach you the qualities that are important in life.
Yeah.
Probably the most important qualities of honesty and integrity and humbleness and doing the right things, because that's just who you are as a person. So there's no question that faith is important. I just look back, and there's been periods of time where when I'm traveling every week, right, I'm coming and I'm getting home late Friday or a late Thursday, and the weekends I'm counting the hours before I got to get on the plane again.
Yeah.
And so, we still maintained activity, but we had to sit down and say, how does it all fit together in our life, right?
Yeah.
Because we couldn't do both. So I said, we're gonna keep this career going, and we're gonna be active in the church at this level.
Yeah.
And I think that helped with
expectations,
and a little bit of the guilt, if you will. But we sit down and we said, here's where it is, and we've adhered to that, and I think it's found the right balance in our life.
No, that's cool.
But you can't go. It's hard to achieve the level of happiness and even success without the qualities that faith bring to you.
Yeah.
I mean, and so that's important to us.
That's so cool. What advice would you give to somebody who's on the front end of this journey, who's on the front end of this entrepreneurial journey?
Yeah.
If you sat down with kind of the next generation of leaders / entrepreneurs,
mm-hmm.
what would you tell them? Like, what are the things you say, hey, make sure that this is a part of your blueprint or your plan?
Yeah. I think the first thing I would say is don't get discouraged, because there's going to be obstacles come your way, right? So have an idea or a vision of where you want to be. Like the start with the end.
Yeah.
I love that. Start with the end. Because if you have the end and that's the goal and you're committed, then these obstacles don't throw you off the rails. You can just keep going.
Yep.
But I would say to somebody, first of all, there'll be challenges, but don't give up. Keep fighting. Have an end in mind, and figure out as you go how to get there. Because you can't see everything when you start, but start somewhere and adjust as you need to go.
Yep.
But and make the sacrifices necessary. I mean, some people they see the end result. They see my end result. They don't see the work that it took to get there.
Yeah.
The blood, the sweat, the tears, the stress, all that.
If there's any finding that I've had from doing this podcast and studying success, it's that gap between seeing Kent Alder today
Yeah.
and filling in the gaps of what people think it took to get there.
Yeah.
And I think there's a kind of a consistent misunderstanding of success and how linear it is.
Yeah.
And how that process of growth, and when you get under the hood and when you kind of really understand what success looks like, it is a very rocky, hard, discouraging, lot of obstacles process.
Right.
You know what I mean? And I think that's what I've loved about really hearing your story and stories like yours, is so much of it has to do with you just saying, I'm a competitive sucker and I'm not going to quit. And I'd never quit. And I thought it was going to be 6 years, but there's no way that I'm quitting this company when it's vulnerable.
Nope.
It's either I'm going to go down with the ship or we're going to make it work. And it kind of feels like that's what it takes.
Yeah.
To go get that outcome, is just I will never quit mentality.
Yep. You gotta have the drive and the stick-to-itiveness to be successful, and some luck along the way. I mean, you look at Kyle Winningham, Michigan pops into, I don't know where it was in that process, but I look at TTM. I mean, that opportunity popped up, and I didn't know what it was. It could have been something else, but I knew.
I look at both of those, and 100% luck.
Yep.
But there's also a lifetime of preparation.
Yeah.
That put you in a position to take advantage of that luck or good fortune. You know, both with you and Kyle. You're like, Kyle's not getting that call if he hadn't spent his entire life grinding on excellence. And you're not getting that call. Like, you're calling a partner saying, hey, let's go spend hundreds of millions of dollars buying companies. And they're saying, let's go.
Let's go.
The only reason they're saying let's go is because you had spent your life prepping for that moment. And that's what fires me up.
Yeah, exactly.
You know, is those moments where opportunity meets preparation. That's like the sweet spot in life. Like, you've put in the work to be ready.
Yeah.
For that moment, you know.
I think you said it earlier when I'm working with Deloy Hansen and Gary Sorensen, and what I learned from them. And I realized, just when you said that, I just mentally started, I learned this from Wurtzer, I learned this from Baugh, I learned this.
Yeah.
And I'm reading these books because you know, when you're the CEO and I'm the CEO, and I'm going, I got to really understand what that means.
Yeah.
You know, so I read leadership books. And
I got to go to CEO school.
And it was said, when you walk down the hallway, walk straight and walk with a purpose, because you're the leader. And just down to the etiquette, don't stick your fork in. You know, I read everything.
So cool.
And I applied that because I'm coming from
humble beginnings.
And stay humble. You got to stay humble. Don't ever get caught up in yourself.
But I think there's this contrast of stay humble and stay stagnant.
Yeah.
Like, stay humble is way different than stop growing. You know what I mean? And
humble means you're learning, right?
Yeah.
You're learning. If you're not humble, you can't learn a thing.
Sometimes you can be humble and not learn too.
Well,
and so I think there's like a really good combo of like being insanely committed to getting better, but also, humble.
I'm humble to the point where I'm learning.
Yeah.
I'm not humble to let somebody win what I should be winning.
Yeah.
You know, I'm not
You're not a pushover.
I'm not going to let you win just because I'm humble. I don't know, maybe that's a wrong description, but we're going to achieve everything that we can.
Yeah.
We're going to maximize what we can be.
So one more question before we finish up. You've had these beautiful chapters in your life. What do the next chapters look like? What are the next things that fire you up? What are the next mountains to climb? Like, what are the aspirations? What are the things that you look forward and you say, this is what fires me up in the years to come?
Yeah. That's now I'm 76. That's a hard one, right? Because I retired like 10 years ago.
Yeah.
And when I retired, I got on 5 different boards.
Yep.
Right. And that was helpful because
to stay active.
I knew, having had that 1 week experience in 98, that I got to have something. I can't just stop.
Yeah.
And so I was on 5 boards. I was on the trustees of Utah State. And when I got my calendar out and I'd see a board meeting, I'd go, great, now I got to prepare for this board meeting. I'm going to go and we're going to make a difference. And I've got
kept you engaged.
And I'm engaged with good people and all that. And now I'm down the road 10 years. We sold 2 of those companies. I've rolled off because of my age on the board of trustees and TTM. I stayed on TTM board for 10 years.
Long time.
Which was great. And so now I'm down to like 2 boards, and I'm spending a lot of time with my family. I read every day. I study. But I miss being in the game.
Yeah.
I really do miss that. At the same time, being 76 and looking at the ChatGPT and all the technologies, I realize that I am 76. So one of the challenges I've got is how do I really make a difference now in people's lives?
Yeah.
And so I'm still involved in a lot of charities that we donate to. We're trying to give back and follow those charities kind of thing. I follow my grandkids, which is a little different because now I'm just on the sidelines watching.
Cheering.
Which in a way is good too. So we've got a big family, 17 grandkids. The family still will come over every Sunday night, so I get involved in that. But I recognize that at my age, I'm not going to go back. I'm not going to be a coach of Michigan or a CEO anymore. So I've got to find
those times and seasons.
Those times are gone. And Casey, that's in a way that's hard.
Yeah.
It really is hard. But I've evolved to where I can enjoy life without feeling guilty.
Yeah.
Because when I retired and I didn't have every hour of every day schedule, I'm just wasting away.
I'm not productive. Yeah.
Right. And so now, I mean, when I see a board meeting on my calendar, I go, geez, I want flexibility because we want to go to St. George or we're going to Europe. And so
it's fascinating how it changes.
We're trying to enjoy those kind of things. And same thing with Donna. She had the breast cancer 6 years ago, and so we've been battling that.
We talked about that because my father-in-law, he had a really profound experience.
Yeah,
where he had cancer, and it hit him instantly. He was working. He was in his 60s, still working, and he just said, "I'm done. I'm retiring." And it was this instant moment of, oh man, my mortality, I don't know how long I'm going to be here.
Mm-hmm.
And for him, it was a very distinct shift. And he's actually transitioned very beautifully. He loves retirement.
Okay.
But a lot of it had to do with that moment. With health. And it when I was talking to you, it feels like that was part of it for you.
It's part of it.
Was when Donna had her cancer, realizing, oh, wow.
It makes mortality real.
Yeah.
And it makes you evaluate your priorities.
Yeah.
And what really is in life, the important things.
Yeah.
Now, having said that, I loved our pre-cancer life better
than post-cancer.
Because it was, you're still got that a little bit of a carefree thing going. But, I've got the hobby. I play a little golf. I'm involved in pickleball. Donna plays pickleball. We have a home in St. George we go to. We got friends in St. George. I think we have 4 cruises this year, cruises or a vacation in Mexico. So we're doing the things that we
But Donna's still in it, right? She's still
engaged,
fully,
and she's engaged, and
but still has cancer. Like the cancer's still there, right?
She has a chemotherapy treatment every 3 weeks.
Because that was the combo we had. Was you guys kind of made a life decision where you just said, we're not gonna not live our life,
right?
Like we'll do the chemo and we're gonna fight, but we're also gonna have patches where we go live. And we're gonna book the vacation. We're gonna go for it. And I thought that was like a very special. Yeah, like a very raw combo where you're just saying, hey, we're going to go. We don't know how long we've got.
We don't know.
And we're going to live. We're going to dance. We're actually going to go for it.
Yep. There comes a point, the chemo treatment, and for about a week, it's really hard on Donna, tired, the sickness and those kind of things. So it kind of takes a chunk of your life out in order
every time
to have a better life. But we also said that we can't just let that drive our life. So we're going to have a compromise. We're going to take a little more risk by missing a treatment so that we can go on a vacation. But our quality of life has got to be something that we enjoy.
Yeah, and that was a choice you guys both made and said we want this.
Both made it. And we sat down this year and we looked at the trips that Donna wants to go on, or we both want to go on, and we looked at the chemo treatments and we lined them up. And so every 3 weeks, this time we're going to skip a week.
Yeah.
This time we'll go 6 weeks, and next time, because there is some more risk that the cancer comes back. But we did go to the Mayo Clinic and talk with those doctors. We had MD Anderson look at Donna's files. So we've got all the information that we could to make the best decision that fit for us. And so, there's the unknowns that are out there, but we know that we're going to try to have no regrets when it's all over with for us, and the trips we're going on with friends and with family. So it's we're doing, I think, what we should be doing, and at the same time with some of the charities getting involved, giving back to the community. And so I do miss the days of being involved in the game, but also when I look at yourself and others that are 40s, I'm not going to beat you in a foot race, or other things. So it is where we're at, and we're good.
Well, the thing that I'd tell you, I haven't known you for a long time. It's been fun for me to hear your story, and I admire the life that you built, and I admire the legacy that you've left up until this point. And it's fun for me to hear it and to listen to it. And I just feel like you've lived a really beautiful life. I think you've lived a life that you got to be so proud of. You got same girl you've been married to your whole life. You got 6 beautiful kids that you love. You got a faith that is important to you. You built great business. You've employed tens of thousands of people, made a lot of people millionaires. These are all just really cool to be able to look back and say, I danced, I didn't leave a whole lot of music unplayed.
Right.
And I think there's a lot of people that couldn't say that same thing, that said, man, I got this regret or that regret. And it feels like the mistakes that you've made them going full speed, and that's what I want to do. I aspire to do it, trying to do it. And I love seeing examples of people that are further down the road that have lived that type of life. So anyway, it's been really fun for me to hear your story and cheering for you guys, cheering for you and Donna. Cancer's just tough. There's no way to slice it other than it's just probably end up killing most of us. It's not kind of if it gets us, it's when. And, you guys are in it. And I think the way that you guys have chose to go navigate it is pretty consistent with the way that you've chose to go live your life, which is we're going to go dance and we're going to go dream big and we're going to go, these vacations, they're dreams. Dreaming up, saying this is an experience I want to go have.
Yep.
And it's saying, I'm going to take a little bit more risk to be able to go live. That, when I have that treatment, I'm not really living. I'm kind of surviving, and I'm going to go live a little bit more. And those are all just things that it's fun for me to listen to, and I admire them. So
I appreciate your comments. And when I look back on it, just in this conversation, I'm going, we did accomplish a lot. And it's not me. I've mentioned the teamwork that I've had, and my family was very supportive, and particularly Donna.
Yeah.
Because sometimes with being absent a lot,
it's hard.
Was not easy.
Yeah.
That was hard. But somehow we figured that out.
Yeah.
And so that was part of what you do. You figure it out in order to not leave anything, not have any regrets.
Yeah.
So I appreciate that, and we've lived a dang good. I talk like it's over. It's not over with yet, but we got a lot more to do.
Yeah.
So, and I thank you for having me on this podcast. I appreciate, and I'm actually honored that you would have me on your your podcast.
A Logan boy going and building a multi-billion-dollar company.
Yeah.
That's pretty cool.
When you think about, I think about coming from Logan and my background, and every once in a while I look at what I've accomplished, and I couldn't, it didn't all happen in Logan because we had headquarters in California, and I'd fly somewhere every week. But I'm pretty pleased that with what we've been able to accomplish.
It's incredible.
And, just pretty humble about the whole thing, I hope.
Yeah. So great. Thanks for coming down. Thanks for making the drive. Appreciate it, brother.
I appreciate it. Thank you.
This podcast is brought to you by Sandlot Partners.